Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, it was a day of correction, of course, given the fact that we managed to defend that 21,600 mark, Yatin, but at one point of time, we had broken below that crucial level, and the Sensex also shed somewhere around 500 points or thereabouts. But the real correction was really in the broader markets, Yatin. Mid-cap index down 2.5%, small-cap index plummeted, 4%. In fact, if you look at the, advanced decline ratio, clearly in favor of losers, and how 1:5, that was the kind of advanced decline ratio on the NSE. And if you look at the volatility index, India VIX has risen somewhere around 5% or so. 16 is the kind of level that we are looking at right now. Talk about the sectors. Of course, PSU stocks took a battering in today's session. Aside of that, the Nifty Bank index fell below that crucial 45,000 level. Nifty PSU Bank index also lost in excess of 3%. So almost all the sectors led by realty, metals, all of them were down. But it was just the defensives that, kind of were trying to hold their head above the water. So IT as a pocket did well, and so did pharma. If you look at the individual movers, we'll talk about the PSU pack in a bit, in details in a bit, but let's look at the losers on the Nifty. Hero Moto, despite a good set of numbers, of course, some bit of internals coming in with respect to EV business. Because of that, brokerages are also mixed. Stock was among the top Nifty losers. Coal India, BPCL, ONGC. So some of these, PSU names, and then you had banking names like IndusInd, SBI, Kotak, ICICI. These are some of the laggards. On the gaining end, as I mentioned, defensives were trying to hold their head above the water. So Dr. Reddy's, Wipro, Apollo Hospital, Divi's, HCL Tech, and Aisha and M&M from the auto pack were also among the gainers in today's session. But Yatin, before talking about the broader end of the markets and which were the movers and shakers there, let's talk a little about the PSU stocks. The PSU index on Friday as well, we saw a big sell-off, but today, once again extending that sell-off, talk about rail, power, defense, massively. All of them.
So, Nandita, if you open the Nifty 500, the most biggest losers, and not single digit but double digit losers, were all PSU stocks. SJVN posts a dismal set of earnings, down 20%. NHPC down 15%. NLC India, New India Assurance, GIC Ray, all of them down 15%. And a massive correction coming in all of these PSU stocks. Rail PSUs, defense PSUs also saw some big correction. Now, there is no specific reason why the stocks corrected. The probable reason could be that, since the last 2 years, we have seen almost a 4-5 times kind of a return in all of these PSU stocks. And finally, there is some bit of profit taking which is happening, especially when you are in that March quarter. Most importantly, Nandita, my colleague Sumit had created a data and we were analyzing as to what kind of market capitalization loss have the PSU seen from the peak. The number was a whopping 6 lakh crore rupees. So yes, that is the kind of market cap losses that we have seen for PSU stocks, and it's clearly profit taking because from all-time highs, the stocks have corrected anywhere between 15 to 25%.
Right, I think the numbers also for some of these companies weren't all that encouraging, right? So, which is why I think some of the stocks are seeing some bit of sell-off. But Yatin, let's talk about some of the stocks that are on our radar this afternoon. Talking about Hero Moto Corp. That's the first stock on my radar today. Of course, the numbers are pretty good. 50% kind of a profit growth on a YY basis was above expectations. But there's some bit of weakness in the EV business. That is something that the street really took note of. And as we saw, there was a 5% kind of a downtick coming in on the share prices. Let's take a look at what the street or what brokerages are really saying about the numbers. Morgan Stanley, has an underweight rating. It has a target price of 3,638 rupees on the stock. They have noted that the management appears to execute the strategy well, and market share gains in the premium segment will be key to track. But there could be disruption risk in the core segment and elevated valuations because, of course, the stock has run up nearly 80% in the last 1 year in tandem with other two-wheeler stocks. So valuations are stretched, and because of that, Morgan Stanley is underweight on the stock. UBS, that is also negative on the stock, so to say. UBS has said that the management has indicated a 200 basis point loss on the EV business. Now, total EBITDA loss of 200 crore rupees is because of the EV segment, and this implies a loss of 2,36,000 rupees per vehicle. that is something which is worth noting. And despite discounts, UBS says that the EV market share of Hero Moto Corp is at merely 2 to 3%, which if you compare it to their core business of internal combustion engine, ICE market share of 30%. So there's a lot of catch up to do when it comes to EV business, which hasn't really fired up, and which is why UBS and Morgan Stanley and the likes are kind of negative on the stock. Goldman Sachs as well has a sell rating, target price of 3,730. They maintained that the ICE two-wheeler segment is 16% of the EBITDA margin, which advanced 2.5% on a year. But it's the ICE segment that is enabling 125 to 150 basis point kind of annualized investment in the EV business. So that means the margin for the core business is getting eroded when they are making investments in the EV business. So that's, but aside of that, if you look at CLSA, they have a outperform rating, target price raised to 5,246. So this is one bull case emerging. They believe that the company is poised to gain market share in the 125cc segment with new launches lined up, and the gross margin, of course, they've taken note that has expanded on a sequential basis, but EV business remains loss making. That's what they have pointed out. And the general view is that the current valuations have largely captured the cyclical recovery. So that these are the two bull and bear cases or scenarios emerging when it comes to Hero Moto, but clearly it's a loss or inability to gain share in the EV business that is weighing down on Hero Moto Corp.
Correct. So that was about Hero Moto Corp, but another consumer business which is witnessed some good numbers for the third quarter is Honasa Consumer. Despite the numbers, the brokerage was slightly skeptical on Honasa Consumer, which is housing the brand Mama Earth. Now, JP Morgan has downgraded the stock to underweight, target 390. They see risk to the growth expectations moving ahead, and that is the reason why they have also cut the EPS estimates by nearly 5% for the current as well as the next financial year. Obviously, if you look at the growth, JP Morgan believes that there could be some growth challenges for Honasa in the near term. Most importantly, the third quarter revenue and EBITDA versus JP Morgan expectations was slightly below expectations, given the fact that the other income has really driven the profitability for them. In fact, the management sounded cautious amid intensive competition as well as soft demand environment. So the management commentary also was not that great. In fact, if you look at the current valuation, the stock traded as 100 times price to earnings ratio of FY25 earnings. So slightly expensive. Obviously, there is some high growth, but yes, there is higher competition, which is probably a risk for the growth in the near term to medium term. Stock, however, ended nearly 2% higher after a gap up opening. But yes, JP Morgan has downgraded probably because of which there was some pressure at high levels for the stock.
Right, clearly demand pressures and competitive pressures, weighing in on sentiment, even though the numbers have been pretty good for Honasa. I think last quarter as well, the numbers were extremely good, and Jefferies, in the response to that had, given a very bullish view on that stock. But, with that, let's move on to the next stock on my list, Divi's Labs, one of the gainers in a weak market in tandem with all the other pharma stocks. Numbers weren't all that encouraging, Yatin, but, margins did improve on a sequential basis on the back of favorable product mix as well as lower raw material costs. The management sounded confident on double-digit growth in FY25, and that is something I think that weighed or rubbed off on sentiment, and of course, which we saw reflected in the stock prices as well. If you look at some of the key growth drivers going forward, the top line growth profile is expected to get an uplift, from FY25 with the commencement of its Andhra unit. That is something commercial production is expected to start soon, and post regulatory approvals and client qualifications, and that is something that will contribute to its top line growth in FY25. The other medium term opportunity to watch out for is the company's interest in peptide building blocks. Now, this interest is partly driven by some of the new drugs in diabetic, obesity as well as anti-glycemic compound categories. The company is also looking to launch generics for a few of the molecules that are going off patent, and these opportunities can emerge anywhere between FY25 to FY28. But there are some risks, logistical challenges due to the turbulence in Red Sea. Management has already indicated that there has been a 30% spike in freight freight cost and which will weigh on operating margins in the near term. But that said, the balance sheet is also getting stronger with a 3,900 crore rupee cash, which will help in long-term initiatives or investments, so to say. Analysts at our Moneycontrol Pro, they have they have a positive view on the stock. They believe that valuations are at a premium, but have moderated post the kind of time correction that we have seen, and they have retained a buy on decline kind of strategy for that stock. But all in all, even though numbers haven't been all that great on a YY basis, but management commentary is pretty positive, and that is something that the street has really cheered in today's session, Yatin.
Absolutely, and the pharma stocks in general were today slightly doing better versus the market expectations, given the fact that pharma and IT stocks in general are defensives, and probably some bit of institutional churn is happening on that side.
Well, that was the trade for today. Of course, we will be back in the morning. If you have any queries regarding all these PSU stocks that have been hammered in the last few sessions, do send them in to us on our live feed at 8:30 a.m. tomorrow morning. Of course, we will take note of them and try and get them addressed by our experts on the show. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for watching from me and Yatin. But stay tuned to Moneycontrol for all your other news and updates.